Hi everyone, so today we are going to be covering the Eaton Corporation. This is going to act as a stock analysis video for the company, so let's get right into this. Now, they're one of those nice companies that probably you've never heard of them. They have $156 billion market cap, so they are fairly large, but let's see what they are doing specifically. Now, they primarily as an intelligent power management company generating roughly 75% of its revenue from electrical products and systems. It serves industrial, residential, commercial markets by selling products like circuit breakers, switchgear, and power distribution systems. Significant growth is driven by the energy transition data centers and electric vehicles, with 90% of profits coming from electrical and aerospace segments. Specifically, in the electrical sector, they provide components for electrical distribution, circuit protection, power quality, accounting for the majority of sales. Aerospace, they provide hydraulic components, fuel systems, and engine components. And e-mobility supplies EV components, powertrain systems, and transmission technologies. So again, a little bit diversified, but specifically a lot of electrical things. Like I said, aerospace obviously being one big component of it. Now, we could take a look at their earnings, and their earnings, they reported for Q4 of 2025. This is February 3rd, and it was very good overall. So yeah, I mean, the reason why it says it trailed off is because 2026, the outlook, but we'll take a look at it. So EPS was up 18% year over year to $3.33. Revenue, an increase of 13% to 7.1 billion. We have backlog grew to 19.6 billion, which was 31% year over year. Full year 2025 estimate was good. Total revenue was 8% organic growth. Adjusted EPS 12%. So really good cash flow. Again, well, I don't want to cover it because we'll get into it actually in a second. I will cover that just in a different segment. Now, the 2026 financial guidance, we have a 10% increase from 2025, organic growth between 7 and 9%. So yeah, I mean, it was below the market consensus for the EPS growth, so I could see why analysts were a little bit more bearish on the company. But overall, it looks very interesting. Now, let's take a look at free cash flow now. And we're going to see that it's, so we're going to assume it's 3.3 billion or around there. Next 3 years is going to be 6 billion, 6.1 billion. So not quite a double, but still, I mean, growth is still growing. The growth is still there for a company, especially this size, which it still looks very good. Yeah, there are no complaints. The financial health of the company is going to have a good amount of debt. The net debt to equity ratio is considered high, and the long-term liabilities you have to be a little bit careful of as well, just to keep in mind. The next thing we're going to take a look at is my DCF. My DCF is going to say that it is 34% overvalued. When we check Wall Street forecast, Wall Street's going to be pretty much in line. It's going to say it's 35% overvalued. True value is about 254, which I do agree with. It has had quite a bit of a rally recently, or at least year to date. The net income of the company, very important. It's very good. Doubled 2.1 billion to 4 billion. So really good net income positive, and it's growing pretty significantly. So good for them on that. When we take a look at where the stock is trading at right now, they are at 389, 52-week high 408, 52-week low 231. So like I said, quite a bit of a rally. I would certainly wait for shares to sell off, and pretty much more or less Tipranks is going to agree with me. They are going to think it is a strong buy, 9 buys, 3 holds. However, only 1 to 2% upside. Already a big rally for the year to date, so you do have to keep in mind of that. It's 389, a low of 350, an average of 395. So certainly, if I wanted to be long the shares, I would certainly wait for some kind of sell off or dip. But I would recommend to be patient, and we will certainly take a look at this for Q1 of 2026. All right, thank you, everyone.